Hello, everyone, and welcome back to the J22 Report. I am your host, Johnny Market. You all know that drill. Smash that like button, subscribe if you already haven't. Just a little disclaimer, nothing should be construed as financial investment advice. These are just my thoughts, opinions on the markets. Read more on the disclaimer below. Anyway, let's get into today's action today. Happy St. Patrick's Day. It's the belated because yesterday was it, and I love that holiday. So let's get into it. As you can tell, retail sales way below expectations. And not only that, the last number was actually downwardly revised. So this 0.2% is actually from a lower base. Of course, New York Empire, this is Monday's Empire State Manufacturing, down 20, Trump's gonna bring manufacturing back. Yeah, I wouldn't hold my breath. But yeah, so yeah, down 20. So you can see manufacturing. Now inventories rose 3%, but the housing market index, that's 39, big contraction down from the last one. So housing market and today's data, building permits down 1.2%. Housing starts beat forecasted, but everything else, industrial production, that was up 7% capacity. So today was actually a solid day. Yesterday was horrendous for the data. Right now, everything's data's not as important right now because there's no certainty in the markets. You don't know what's going to be done or said or whatnot tomorrow. So which is actually bad for business and bad for the economy. In order for the economy to do well, there needs to be certainty. So this is ultimately, we're going to see a recession this year, I think. How big, I don't know, but we'll definitely see one. The reason why I think it might not be big is not because of the problems that I talk about, but it's going to be because there's a big stimulus coming, monetarily and fiscally. So just going to get into things though is I'm actually honored. I saw CBS. I posted it on mine. It says Americans struggling to pay back car loans. So right now I'm just gonna go. I can show you. I posted this so you can, if you haven't seen it, you can go post this. Uh, but yeah, let me show you again. I will share. Well, you can see I posted it on my feed right here, and it's a good thing. It's worth it. It's 2 minutes. It's about more the auto loan bubble we're facing. So Americans struggling to pay back auto loans. And then you look at this here, just show how bad the U.S. job market has never been as bad it is right now. And this is very interesting stuff. Look at this. They even start out. The U.S. job market is collapsing. The numbers prove it. More Americans are juggling multi jobs than at any time in the last 15 years. So more people are juggling multiple jobs than they have in the last 15 years. Look at that. Slowing down, but paychecks aren't keeping up. Wages have barely moved as the cost of living skyrocketed. And that's what I said. Wages don't cause inflation. If they did, why do we have any? Wages haven't moved. So so Americans are working more but earning almost uh nothing extra. And this is an interesting one. A 45-year-old graphic designer working as a government contractor, not enough to pay for the bills. So after dinner, spends his evenings freelancing as a movie poster designer. Most nights works till 10 p.m. then sleeps for a few hours and does it again. So yeah, if you look at it, this is a really bad and look at this. As I said, the layoffs aren't just in the government. Restaurants and small businesses are slashing jobs. Hospitality and food service, they're taking hits. Well, people can't go to those. Look at this, 27,500 jobs slashed in February, 29,500 jobs in January. So restaurants, they're really slashing jobs. And that's sort of sad because if someone got laid off and they didn't have unemployment, they go immediately get a bartending or something just to get by. So now they can't do that. So I mean, this is going to be bad. So as you can tell, restaurants and small businesses are slashing jobs. So the federal sector gets the most attention, but the private economy is horrible too. So and to show, speaking of the private economy, EY, Ernst& Young, Big Four accounting, senior partner mass layoffs. And these are good paying jobs. Lays off dozens of senior partners, slowdown in consultancy spending. So, as you can see, fresh round of job cuts. So, as you can tell, EY, they're laying off partners. These are good paying jobs. This is going to hit. As you know, what I say, trickle up poverty. This is what America is. It's true. Everyone thinks it's just a low income. If the low income struggling, the rich are going to be struggling, actually. That's how societies work. It's when there's a bifurcated society, that means the part that's doing well are eventually going to be doing poorly. So just look at our US cities. It used to be just a couple of bad neighborhoods. Now cities in general are unlivable. This is so here, let's go. Of course, they had so want to show more? Forever 21 files bankruptcy, plans U.S. liquidation. So, and it's winding down its U.S. stores. So, Forever 21, this is their second Chapter 11 bankruptcy following a 2019. What came after 2019? A recession. So, maybe Chapter Forever 21 is foreshadowing something. Currently has 540 stores to its website. So look at this. And look at this. Locations outside the US are not part of the bankruptcy plan. So you can tell people, that's the thing, that's what Americans don't get. People overseas have better lives and they're richer. Uh, it's one of the things America does not have. It's not like that anymore, if it ever was. I mean, so as you can see, Forever 21, that's going bankrupt. And I've talked about this, but this was, not consumer sentiment. Look at this. Not even during the financial crisis of 0709 were Americans so pessimistic about their financial outlook. So, yeah, very pessimistic. And then last thing, which two things. 401k trend sets alarm bells. And I've covered this before, but more Americans than ever are tapping their 401ks to cover emergencies. So they're rating their 401ks. So 5% of retirement account holders made early withdrawals to cover expenses like medical bills or to foreclose on their home. Now, I think the 401k, they should make it so you can withdraw from it at any time. You know, I really do. And without the penalties, without any of that. So I think that's what they should do. So, and that's a record high. This is a record high. So, homes are seeing financial strength. Oh yeah, the last thing I wanted to get into was when I talked about how our businesses aren't well and they're look at this. Tesla stock falls as Chinese rival BYD and I don't know how to pronounce it, announce new updates. So basically of course, Yahoo Finance takes forever. I'm just gonna I'll just tell you what they are. So what they are is they can charge now, recharge a car within 5 minutes. So obviously our tech sector is not good. Unfortunately, it's running the country now. So it'll probably go in the way of our current tech sector. So, but yeah, that's what we have. Let's get into this. Also, gold. Gold had a great day, and for all transparency, I actually, if you look at this, let me see if I can get to this. Gold, big day, was up like 21. This is after hours, so it's not, but it was up like 25 to $30 today. Look at that, 3,031. And this is quite a move. And I don't think this run is over, but if you look at this, just looking at this 5 year, this is all within 1 year. Around, what was that, October of 2023. Let's even do 2024. Around January 24th, 29th, 2024, gold was at $1,998. This is around a 33 or 35, 38, I don't know the exact numbers, percent move that's happened in 1 day. So I actually wanted to pay off my car loan, two car loans in my family. And so I sold some gold equities today just because it's been quite a move. And don't get me wrong, I'm not like most people, like I'm almost all in on gold. And I'm probably still all in because I'll be paying off debt. So, I mean, I'm probably overexposed, but yeah, if you look at this, let's just go year to date. GDX, it's up 32%. That's a big move. Yearly basis, that's up 50%. On a 5 year basis, 118%. These are big. 1 day, 5 days, 8.25, 1 month, 7.97, 6 months, 14. So these are big moves. And yeah, look at that. Last year GDX was at 29. Now it's at 44. So and just going on a max. Now I do think it will break out, but as I said, I think it will probably top out around 60. Now what I think will happen is during this recession there could be force majeure or just forced selling, comes down some, and then the stimulus will push it all the way back up here. But I sold, and the main equities I sold, I'm not going to say what they are or whatnot, but they were just mainly one minor, but mostly royalty and streaming. The minor was probably like 5% of what I sold. And the reason I chose mainly the royalty and streaming companies is because on the upside, I don't think they'll perform as well as the minors just because the type of profit margin expansion, they're already doing very well. And now, when GDX gets to 60 or 70 or 55 and the juniors really start moving up, then most of what I'll liquidate is minors because I think see, if you look at GDXJ also, that's down 0.8, but if you go 5 day, that's 9.5%. 1 month 10%, 18.52%. Year to date, that's 31%. 1 year, that's a 55%. Now these are smaller, but it's still a big move. And so the main reason, so I'm personally, I'm not financial investment advice, it all depends on what you have. Like some people only have 10% allocated to gold. Some people have 50 or 50% or 60 or 70. Uh, I don't even know if the main reason I did is like look at this move. 1 year, 55%. Year to date, 31%. And then just looking at gold, 199, now it's 303. So, there was a little bit, but if you see it, a little bit of sideways move, but it didn't really came down a little, and it's possible it could come back down. If it does come back down to 2600 or something, personal, not investment advice, just I'll probably end up going back to gold, some gold equities or whatnot. Because what I think will happen is either it'll come down, but it'll, it'll probably come down some and then go up. I think there'll be a final blow off top and just the Huey index, where I'm really looking for, and that's right here, like around 600 or uh 500 is when I'm probably going to sell even more. So, but yeah, I just did it today because I wanted to pay off some loans and with all the layoffs, I'm just uncertain about my job, so I just wanted the car loans out of the way so I don't have to worry about having those monthly payments. Um, so anyway, that's all. Hit that like button, subscribe if you haven't. And just remember the disclaimer, not financial advice. I'll see you next video.